Hey everybody, whoops, I gotta make sure I flick this camera off. Happy Saturday. Big shout out to Tom Crown in the house and Anderson. I see you out there and I want to make sure my audio works because sometimes it doesn't. See you out there and I want to make it does. Yes, excellent. So it's been a rough 24 hours, but a very interesting week. And let's jump in and as usual, not waste any more time. By the way, Tom, we have to get you on DCA again real soon. So first of all, the last 24 hours have been crazy. We'll talk about that real briefly. And I'm going to talk about a whole bunch more stuff. So disclaimer as well, this is edutainment, not financial advice. And if you want to amplify your intelligence, please subscribe. And the story today, we will talk about the important elements that are important for you from the week that we may have passed. We'll talk about Bitcoin layers. I'll drill into the actual critical layers of support and resistance. And it's uncanny. The same ones are coming up again from 2021, 2020, 2022, 2023. It's remarkable. We'll also talk about futures, leverage futures, contango effects, the big three alts now becoming the big four altcoins. I made a video yesterday about the top altcoins that would survive too. Got a lot of views. It's like, I haven't had 40,000 views in 16 hours in forever. We'll talk about some retail rows, treasuries, Phillips curve tension, recession fears, cheap solar, Tesla stock splits, and we'll dive into those altcoins as well. A lot to cover. But first, we've got to talk about the coup d'état. So this piece here, well, first of all, Privyet, visem, как дела? There's a guy called Prigozhin, and that was my best Russian, by the way, the head of the Wagner Group and leader of the so-called coup over the last 24 hours that had everybody excited. They announced they are turning back their convoys and returning to field camps to avoid bloodshed, accepting Lukashenko's peace agreement. What is in this peace agreement? I'm not exactly sure. Maybe a bag of Bitcoin. But first is halt their movement. For the Wagner fighters, they will return to their bases. Criminal cases have been dropped, granting Prigozhin full immunity as well, and restrictions, etc. It's all very interesting. And I don't know. I don't understand politics or how all this works, but it's just been a fascinating 24 hours. All I want is peace. That's all. Anyway, enough of that. Let's talk about other big news as well. Before we get into the nitty-gritty of crypto, the IMF flips on crypto. This is kind of stunning, considering the Bitcoin price has almost doubled this year. Sparking fears is also for many that are not on the train, that the window to jump on the train may be closing, leading traders to abandoning smaller cryptocurrencies in favor of Bitcoin and Ethereum. That's what you see in the dominance. Now, the IMF has softened its previous attitude towards crypto bans, stating that a complete ban on crypto assets may not be effective in the long run. Yeah, that's what we always say, it's a cockroach, you can't kill it. Now, the IMF also clashed with El Salvador in the past over the adoption of Bitcoin as legal tender, expressing concerns about financial integrity and scalability and all that type of stuff. And now the dominoes are falling. People are collapsing. Like 3 years ago, BlackRock said they'd never touch Bitcoin. Now they filed for an ETF. And you got the IMF saying, oh, well, crypto's inevitable. But the IMF also wants to play part of the whole central bank digital currency revolution too. So interesting times out there from Forbes. Let's first of all talk about this time is different. This is a super interesting chart. And this is the Bitcoin short-term holder realized profit loss ratio. What's stunning about this is the breakout, obviously above the psychologically important 30,000. I had a tweet earlier this week saying it was a critical level for many, including Michael Saylor, because after 29,400 or 28, whatever the number is, they become profitable. But it's also been accompanied by a surge in short-term holder realized profit loss ratio. This has reached a value of 59. And this is a level that is commonly seen around market euphoria events. It's early. It's just kind of the pre-halving run is happening as we speak. Short-term holder realized profit measures, again, the ratio of realized profits to realized losses for short-term holders of Bitcoin, less than 155 days. And a high value for this ratio indicates that the short-term holders are realizing profits, which is a sign of market euphoria. But they're not giving up yet. And that made me kind of think about, okay, who is having the euphoria? Who are these short-term holders? But before we get to that, and I show you exactly who's stacking, let's look at what happened this week. This is Bitcoin has been running the show over the last 7 days. All else lags from Swiss block. You can see here Ethereum up 1.2%, Bitcoin up 4.46%, US 10-year bond down 0.04%, dollar index up 0.5%, S&P and NASDAQ down 0.5%. So it's been an interesting week. Obviously, we knew at some stage the FAANG stocks, which I'll talk about in a minute, had to run out of steam. The question is, have they run out of steam yet? And is money going to start flowing into Bitcoin? And then after it stops flowing into Bitcoin, it'll run into Ethereum. And after Ethereum, it'll run into the altcoins. Usual situation. But let's look at Bitcoin right now. And this is per our TABI model. I call it the top and bottom indicator. I come up with weird acronyms, so apologies for that. But this shows you the large holder flows. And again, the key here is after Bitcoin hit the year-to-date highs of 31,400, after a flurry of investment, including Wisdom Tree, Bitwise, Valkyrie, Invesco, all filing for spot ETFs after BlackRock's filing last week. This chart here shows you the large holder flows. Now, when it's blue, the large holders are pulling out of the market. And by the way, the definition of a large holder is somebody who owns more than 0.1% of the total Bitcoin supply. So that's a big bag, ladies and gentlemen. But you can see here, every time it goes yellow is kind of neutral, orange, red, deep red, that is heavy, heavy stacking. And if you look at this from basically, but they started stacking at the very end of Feb, all the way up to today, the biggest stacking amount happened literally just since the BlackRock ETF was mentioned. They are stacking. Whoever they are, we're not sure. But the big players are jumping in and they're grabbing as much as they can because they know it's going to run out soon. The supply crunch that I've been talking about for 2 years since the start of the channel will eventually happen. I didn't know if it was 2025 or 2027. And I remember Jamie from Bloomberg was on the channel and he felt it could happen later this year. Maybe he's right. So watch this. But this is a very positive signal too. Let's look at some of the layers as well. I thought this is uncanny. This is what we call the layer out model. Yet another model. Showcasing some models today because they're very pertinent for Bitcoin. But it's really interesting to see how layers persist from 2020, 2021, 2022, and today. I'm just going to call out a few key layers that I see. And that's how people were asking me, how did I know to put a limit order in at $25,021 8 days before it hit? And that was because of this exact model. But here you can see a couple of key layers that I will point out and where they come from in history. One is the old 27K resistance that we had for quite a while, a little bit this year. Then, if you go back to the spring 2021 support level, 31,500 critical level. And guess what happened? Yes, what was support has flipped into resistance. And Bitcoin is bouncing off that. It has to typically tap on it a few times to break through and get above it. Then after that, we got kind of Jan 2022 support level of 35K, 34.6, whatever you want to call it. That is also one of those key areas that also could be resistance. So once we break through 31.5, 31.4, it'll be off to 35K, 34,500 approximately. And then after that, a big air gap all the way to what I believe could be somewhere between 42,000 and 44,000 by April 2024, right before the halving. And we'll see if this works out. Again, internet doesn't lie. There's the chart. You can always go back and bookmark it and save it and check and see how accurate this is. But it's fascinating to watch. In addition, the force is very strong for Bitcoin because look at the girth on that trend line. It's big and fat. And that typically means we are not out of steam. We're not turning yet. The question is, will it get rejected hard off 31.4 or will these big players continue to stack? That is what we need to look for as well as we go forward. So let's switch gears and talk a bit about futures. All right, so the spot Bitcoin ETF is too dangerous. But having 15 futures ETFs, no problem. But why not up the ante and leverage them? Leverage futures, yes, approve away. The SEC approves the first leverage Bitcoin futures ETF. The volatility shares 2x Bitcoin strategy ETF BITX is scheduled to launch on the Chicago Board of Exchange next Tuesday, June 27th. That is 3 days from now, ladies and gentlemen. And I will play with that for sure because I'm bullish and have been. So that could be fun. Again, leverage is very dangerous, ladies and gentlemen. If you don't know what you're doing, do not touch leverage ever. But it's been life-changing for me during my life. And also, Adam Cochran chimed in. Shout out to Adam Cochran if he's out there. So the SEC thinks it's safe for you to buy a 2x leverage CME futures ETF, but that spot Bitcoin is too risky. Whiskey Tango Foxtrot. And Adam is dead right as well. And I didn't see this till I actually had the conversation on Discord yesterday regarding this. So anyway, crazy times. Let's talk about the futures ETFs though, and how important they are as tools and how not to use them and why not to hold them for a long period of time. So first of all, since the launch of BITO, that's the Bitcoin futures ETF, the very original one, it's lost 14%. Again, performance against Bitcoin. GBTC, Grayscale Bitcoin Trust, at the same time has lost 17%. And remember, this is coincident with all-time high. Every time somehow a new ETF is launched for Bitcoin, it marks the top of a cycle. We'll see if that will continue. It could just be chance. It's only happened twice, so my sample size isn't very large. But welcome to contango, ladies and gentlemen. The futures market for Bitcoin is often in contango, which means that the price of the futures contracts is higher than the spot price of Bitcoin. And that's because investors are willing to pay a premium for the right to buy Bitcoin in the future, even if they have to pay a higher price for it. Also, there's also rollover costs. BITO futures contracts expire every month, and the fund must roll over, which incurs some friction and some costs, and this leads to losses. So the point here is, ladies and gentlemen, if you're playing with BITO or BT using our PTOS model, it has to be 6 weeks or less, because if you hold it for longer, you're going to lose 1.5%, 2% every month like clockwork. Zooming in deeper to show you the BITO loss, you can see here, since February or the beginning of the year, it's lost 11% against the Bitcoin benchmark. So again, this is a short-term thing. Imagine, hypothetically, Bitcoin falls to say 21, 22K, go back to one of our layers, hits that, you know it's a layer, then you load in to a future, and then you get out after the bounce, after no more than 6 weeks or even less. Now let's talk about altcoins real quick before we get into some macro news. This has become very interesting. As you know, I am a firm believer that daily active users on a chain is a critical determinant of future success. And here you can see the big three has just become the big four. For the longest time, the big three were Ethereum, Polygon Matic, and Solana. Now, guess what's added to the mix too is Arbitrum. Arbitrum has still only half the daily active users of Solana, but it's growing. And speaking of growth, look at that little gray line spiking vertical again. Look at Near, that's Near protocol, and it's growing fast. Note, Cardano has a third of Near's daily active users. Somehow Cardano's dropped off, I'm not sure why. And of course, a lot of people are excited about things like SWE and Aptos. But the daily active users of these chains is so small, like SWE doesn't even register. Like it's like 1,000 or 1,200 daily active users. So anyway, watch the activity on the chain. It is absolutely critical to focus on. Now, let's talk about FAANG. Look at stocks for a minute. A lot of questions about FAANG. When's it going to run out of steam? Well, this is the performance since January, and it's up 61% in 170 days. And again, looking at the girth of this thing, yeah, it's topping up, but it's done that before. The question is, will it stop? It's been insane. It has to take a breather. We're going into July and August. They are historically quiet times in the market, low volume. People take vacations, and therefore prices can sometimes trickle down. So watch for that. I'm looking at a little hedgy poo there too. But there are some tailwinds for some key assets out there in the market. Cybertrucks. When Cybertruck? Well, they're coming. I know people say, oh, it's only a car. But it's not only a car. It's the most sophisticated vehicle ever made in the history of the world. And that's not a moon buggy or something. And deliveries and order updates are happening right now, and trucks are being spotted delivering these cars. They have 2 gigapresses up and running, stamping these things out, and it's happening. And once the world realizes what this thing can do, it's going to be a very special time. And again, yet another tailwind for Tesla, and I'm optimistic about Q2 results. Now, I did have a question as well from the community on Patreon. When is the next Tesla split? So I analyzed the history, and it's not very scientific, but the price before split in the past has been between, say, $419 and $891. Typically, it's a pre-split run and then a post-split duck, etc. They did a 5-for-1 back in 2020 and a 3-for-1 last year, not too long ago, but it's going to, hate to disappoint people now, it's going to be way off. I don't expect the next split to happen until about November 2024, and the price of Tesla will be about $750 at that stage, or they might split at $600. It depends on exactly how they feel, whatever they want to do. Remember, they don't just split the stock to help people, but they make it more accessible for employees to buy as well in their programs. So that's one of the key reasons for it too. So again, I do believe it's a $350 to $400 stock right now, very easily within the next year. By April 2024 is going to be such a fun time to be alive, but for many reasons, not just Bitcoin. But it's going to be a long time after that. But if and when Tesla nail FSD, it'll go to 750 real fast. Mark my words. Now, speaking of US dollars, because we care about the dollar, not to hold it, but to watch it, because it determines where Bitcoin's going to go. But de-dollarization is happening. This is Janet Yellen at the, I think it was the Financial Services House Committee, something, and her testimony was there, and she was asked about, will de-dollarization happen, i.e. the decline of the dollar as a percentage of global reserves? And she said yes, because other countries around the world will want to kind of mix up their investments, diversify, I think was the word she used, divestments. But the US dollar has fallen from 73% of global reserves 20 years ago to about 58% today, and it's coming down fast. And the number of dollar enemies are lining up, BRICS nations, etc. So that is happening. In addition, who's buying US Treasuries right now? Well, look, I just want you to focus on the green part. That's the rest of the world that used to buy them. But look at now. If you look at 2022 Q2 versus 2023 Q1 versus 2019, there is no green, which means the rest of the world is not buying Treasuries. The people that are buying them are money market funds, the Federal Reserve, and banks. But the rest of the world is not buying US Treasuries anymore. So that's over. Let's talk about banking. This is an interesting chart. Big thank you to Sanjay for sharing. It shows you that the 3 biggest bank failures so far this year is larger than the 25 banks that crumbled in the global financial crisis in 2008. That shows you the size of this thing. And there's more to crumble. We just don't know it yet. They've been bailed out by the BTFP program, and it's only a matter of time before they hit the wall with the commercial real estate crisis, which is coming too. But we spoke more about that. But let's look more at the macro element. This is the slope of the US Phillips curve. Focus your eye on the bottom right-hand corner. And the Phillips curve typically is a relationship between unemployment and inflation. And with a steepened slope, the relationship between unemployment and inflation has become stronger. And the implication, everybody, is the Fed may need to raise rates more aggressively in order to bring back inflation to its target. That whole 2% nonsense, which historically over the last 40 years, inflation hasn't been under 5%, but that's a separate issue. But they will have to sacrifice the economy, which will lead to a recession and will potentially lead to 6% unemployment, etc. But let's look at some more elements of this, what makes up the actual pie itself. US retail sales are following Sweden, that I reported on about 6 weeks ago, Germany 4 weeks ago. Now US retail sales are in the tank. Boom, done. Now, if that doesn't scare you, if you're a retailer and you're depending on selling clothes and shoes and food and stuff, that hurts. In addition, the Fed cannot destroy the last bastion of jobs, although they want to. There are certain jobs you can't get rid of, like education and health services. People will still get sick. People still need nurses and doctors, etc. And there are other things that are just there that are kind of, they were vacated during C19 back in March 2020, and they're still only returning back in. And that's the problem. The rest of the other industry categories are already negative. So watch this space carefully. In addition, a recession is coming, no doubt. This is the US yield curve inversion history since 1970, over 50 years. Every time it's been this high, it has led to a recession. No ifs, ands, or buts. Or maybe this time is different. I don't think so. But I do think the government will say, well, we kind of had one, but not really, etc. But things are definitely, every macroeconomic indicator I look at, wherever I am, China, Germany, Sweden, USA, UK, it's all ugly out there. Let's look at the HOPE framework. Big thank you again to Sanjay for this. The HOPE framework is the economic model displayed by the CIO of Piper Center, I think it's Michael Cantro, to predict recessions. And this model is based on the idea that the economy typically deteriorates in the following order. First thing to hit the wall is housing, okay? Second are orders, factory orders. Third are profits. And fourth is unemployment. And you can see we're way beyond peak for three of them. And of course, the bottoming for unemployment has yet to happen, but it's the next one to hit the wall. So if this is true, if this continues, for example, in the 2008 financial crisis, it was preceded by a decline in housing, followed by a decline in new orders, then a decline in corporate profits. And then the final thing to fall was unemployment. And we expect that potentially to happen this time around too. Speaking of deflation, China is on the cusp of wicked deflation, and deflation is the kiss of death, especially when you have a lot of debt. And this is the China CPI year-over-year percentage, about to go zero. Like many people expect, it'll happen here in the US too. In fact, many items on the CPI list are already deflationary in the United States. And final piece of good news, though, for those of you who want to be energy sufficient, I think the great thing about the world today is we now have the ability to go off the grid with Starlink. You can get internet anywhere, even in the middle of the Pacific Ocean. You can get solar power at a very cheap price. So you charge your own energy. The only thing you need is a good water filtration system and you're good to go. But here, solar panel prices have fallen 85% over the last decade. Now they're becoming extremely affordable, especially as energy prices go up. And they work even in cloudy climates too. So expect to see a lot more solar panels out there on roofs. So with that, everybody, big thanks to everybody on Patreon. Thank you all for being here, spending some time with me on your Saturday. And I hope all is well. Thank you to the mods in the chat. And I'll see you all tomorrow for the live Q&A. Been working on that already since Friday. Lots of super interesting questions. We'll talk about, tons of stuff. Crypto, options trading, assets, risk management, all that good stuff. All the stuff that's top of mind. And it's funny because this is the first week, the first Sunday in a month where there's no wallet questions, which is great. So thank you all for being here. I'll see you all tomorrow. Bye.